Good evening, good afternoon, and good morning to all of you, and thanks for joining our discussion, our video discussion about business in the time of Corona, how business is responding, and where do we go from here. Extremely pleased to have a great set of speakers with us today. We have Yekaterina Lukyanova, who's a partner at Bering Vostok. We have Dmitry Sedov, who's a co-CEO of Goldman Sachs in Russia. We have Andrei Braginsky, who's a managing director at Moscow Exchange. And last but very much not least, Henry Foy, who's the head of the Moscow Bureau of the Financial Times. So we have a financial journalist perspective, an investment banking perspective, private equity, as well as the main exchange in the market here. So first of all, thanks very much to all of you for joining us today. And maybe what I would do is just very briefly to kick off, all of us as businesses have been having to respond to what's been going on in the last few weeks and having to make practical decisions about what do we as businesses do to adapt to the rapidly evolving situation. Maybe I can just ask all of you to just give us a quick snapshot of what you yourselves have been doing within your companies to sort of ensure business continuity and to respond effectively to what's happening. Katya, maybe I'll ask you to kick off.
Sure. Just for us, I think it will be pretty easy. We're a small size firm, so we're like about 50 people, and more or less we've been working anyhow on the online mode, traveling and conference calling all the time. So no big difference aside of constantly washing the hands and keeping social distance. I think we try to close the office, but still about 10 people a day show up. So, 20% attendance rate, which is still pretty good considering that we're in the center of epidemic right now.
Yeah, absolutely. And for next discussion, I'll send around hand sanitizer to everyone so that we can keep the discussions clean. Dmitry, maybe I come to you. You have the largest organization of us on this call here. How is that affected?
Look, we've moved to sort of business continuity planning at the beginning of last week. We have split teams globally, and the arrangement was that teams oscillate. So Team Blue spends a week in the office, then doesn't show up for another week, and in the meantime, Team White is in the office working. That setup lasted between Monday and Wednesday last week, when we were all moved to the next stage of our business continuity planning and actually ask everyone to work from home. There's some critical personnel globally that is still in the office. They obviously have, sanitizers, masks, and so on and so forth, and the office gets cleaned over the weekend on a regular basis with a lot of attention. But the bulk of our people globally and in Moscow works from home. We're all set up. From the technology perspective, we have a very busy video conference and teleconference schedule, and things seem to be working pretty well.
Good to hear. And Andrei, from your end?
About 80% of Moscow Exchange employees are now working remotely. The main challenge for us, of course, was to ensure operation continuity of the trading and settlement infrastructure. Also very important to ensure info security for all remote workplaces. We're also seeing sharply high trading volumes over the past 3 weeks, and the number of transactions on many markets tripled. So we had to deal with this increased volatility and increased load on our infrastructure successfully. So all our services remain fully available.
Good to hear. And we'll come back to you to kind of understand a little bit more about what you've been seeing in terms of the market response and what's going through your platform. But Henry, I suppose in the Moscow Bureau, it's not such an adjustment that's required. But if you look at the FT more broadly, of course, you've got people all over the place. And how do things look on your end?
Yeah, Tom, that's right. So I've been working from home for the last 2 weeks. The office is actually 3 floors below me, but I managed to stay away from even there. My wife and I are very grateful to the puppy you can see over my shoulder here, giving us an excuse to leave the house at least 3 times a day. But the entire FT foreign network is working from home now, and indeed the London office as well. We're now putting the newspaper together with only 3 people actually entering the headquarters, which is really quite extraordinary and something that I don't think the FT could have imagined 5 years ago. So it's really stress testing all of our systems, and so far they're working brilliantly. We now use Slack for pretty much everything, and it seems like all of my days, sorry, taken up with Google conference calls. So far so good, and frankly I think everyone at the FT is really quite amazed at how everyone's pulled together and made sure this will normal business is going ahead, and happy to talk more about this in over the course of the discussion. But I mean, we are under there's huge amounts of demand for our services at the moment, and we're meeting that.
Yeah, no, I'm going to look forward to coming back and sort of drilling in on that to understand how that's going to be working in practice. Let me come back to Katja. So Katja, just for the benefit of those who are viewing who may not know, so Baring Vostok is a large private equity business, but that has 40 or so active investments, investee companies in Russia at the moment or in the region. So, and I know that you've been involved in sort of interacting with a lot of the companies around their response to this. And so what have you seen across all of these different companies in different sectors? What have been the big problems? What are the biggest challenges everyone's facing right now?
Well, I mean, it's still very volatile. I mean, and we're still at the very early stage of how the businesses basically feel the impact. Some feel it definitely bigger than others, specifically like non-food retail. I've just got off the board call with our investment here with all the trade centers. Well, almost all the trade centers closing starting tomorrow. So we have a big impact, of course, on revenue. We're starting to finalize all the plans for the company in the coming month or so, because we don't actually believe it's going to end in this week. That's ending April 5th. And some of the companies which are more IT oriented, the blow will still be coming up. So we're just preparing very hectically for any kind of situation which will develop. And the problem right now with the business is that it's not just the financial crisis, because everybody's been there, we've all been there, and everybody knows, ruble devaluation, we know all how it feels like, and practically all companies have the plan of devaluation that is developed. But everybody's, all the new news that are coming every couple of hours, from all the directions, closing up, new quarantine restrictions, anything else, ruble devaluation, oil, everything on top of that become, had a joke that 2 of our portfolio companies didn't have a budget, like Vkutsville was one of them. And right now, nobody actually has a budget. Nobody understands, a rolling plan over a week is a good plan because nobody actually understands what's coming up. So, the biggest pains, I would say, in the businesses we have is that we have a very short-term forecast period, but also a very long-term necessity to have this forecast. So the forecast, is from white to black in some of the companies, like, do we die, or will it be, the best of our lives in some of the cases? So I would just say that, we're still in the early stage of, getting it all fixed in terms of how the companies react, but we also try to get them on within a regular discussion. We have a Telegram chat, basically, of our 40 portfolio companies, who does what, what are the ideas, how they react to some things, what are the, what are the readings of the yesterday's the president's speech. That was not yesterday, maybe yesterday, I have no idea. But that's how it goes. You don't remember. So we all have this chat of 40 people, and they help each other a lot. So let's see how it goes. It's just on the rolling.
Yeah, and I'd like to come back later. I'll come back to you to sort of expand on that, to understand where you see scope for just interaction between your companies as well as wider business. But let me come over to Dimitri here to sort of pick up on this. I mean, how are you looking at it from, say, a financing standpoint? I mean, my perspective is that we started this year, really for the first time in several years, we started this year well, where from a sort of equity capital markets and particularly IPO standpoint, it was the first time when it actually felt like Russia could really have a serious year. A lot of deals were in advanced stages. I guess that's kind of over now. And so I don't know, do you agree with that? And what is your sort of outlook in terms of what's the potential recovery time for whether it's for the IPO market or M&A markets, and how do you see that?
Look, I think 2019 was an active year. It could have been more active if more companies had expected the aftermath of 2018 events to end quicker. Unfortunately, there were very few deals in 2019. Companies started getting themselves ready for 2020. The calendar of IPOs for 2020 was pretty busy. And what we're seeing now is that these deals are getting delayed. These are spring 2020 deals to summer, and even fall 2020 transactions are getting delayed. Some of those transactions are getting delayed not because of the market dislocation and the volatility, unprecedented volatility in the capital markets, but because companies still have work to do to get themselves ready. So it's an interesting situation. Some of the postponement decisions actually preceded the market volatility that made it very difficult to plan ahead, to estimate what the valuation was going to be, what investor reaction was going to be. But obviously, at this point in time, given the dramatic shifts in the capital market and in asset prices, companies are putting their transactions on hold. We have not made any significant changes to transactions planned for 2021, and that's actually a very interesting shift in the Russian market, that now we see more and more clients and potential clients getting serious about preparation for an IPO, not 9 months before a deal, not a year before a potential transaction, but actually a year and a half, and 2 years. And that makes a lot of difference. So we haven't made any formal changes to 2021 IPO calendar. Obviously, the uncertainty in the market is as unprecedented as the volatility. But we think, as the market settles into the new sort of equilibrium from the asset prices standpoint, we'll have a lot more clarity. But so far, we're not touching 2021 IPO calendar.
But do you think, just to ask a clarify, I mean, so do you say that companies now are sort of getting more serious and being more thorough in terms of their preparation? I mean, are you saying, is that a sort of direct result of the fact that it's clear that no deals can happen in the short term? So it's encouraging companies to then want to go further in terms of being even more ready, even higher level governance wise, and so on. So this is a direct result of what we're seeing?
Well, part of that is a result of just having more time to prepare. But we see that generally, even before this current period of volatility, we see companies, they just take IPO preparation a lot more seriously.
Yeah, good. Andrei, so with Moscow Exchange, it's a very diversified business. So you're pretty much connected to virtually all aspects of the financial market. So that also gives you great visibility of what's going on. What are your key observations in terms of how people have been reacting? What surprised you in the last few weeks in terms of response?
There are several trends. First of all, as I mentioned, the trading volumes are sharply up over the past 3 weeks, particularly on the equity markets, where volumes 4 times higher than typical. We trade $1.5 billion of equities a day these days. Also, derivatives markets volumes are sharply up, and currency. So so volatility is actually good for exchanges, as you may know. In terms of what people are doing, Russian private investors are extremely active. We have more people private people involved into the market than ever before. If anything, they're buying on the weaknesses of the index of the stocks. So we do see some net buying from private individuals. The volumes from prime investors are twice sort of typical level before the whole thing started. And interesting that that international institutional investors is sort of the core of this had been the core of this market. So in fact, we see more volumes now from Russian private investors than from international institutional investors in recent weeks. In terms of what international investors are doing, they're not leaving the market as some people may have expected. If you're looking at the share of ownership of international investors in Russian sovereign debt, ruble denominated of FSS, then it's at 31%, which is close to all-time high. We haven't seen sort of any selling and exiting from the Russian debt, despite of the. Can you hear me now?
Yeah.
Despite of the ruble depreciation.
Mm-hmm. Okay, interesting. Henry, let me ask you a question. I mean, so like Katya was just making this point of, trying to remember, was the Putin speech 2 days ago? Was it yesterday? Was it this morning? The pace at which everything is developing is just unthinkable in some ways. And you have the job of reporting on this and trying to analyze and process this information and put out your take. I mean, how do you actually keep up in a way with everything that's happening, but also not get sort of sucked into the, reporting everything? How do you sort of have that filter, and how do you have the judgment as to, what's really important? You deal with you write for a very financial audience, and so you're having to make materiality sort of judgments all the time. How is that working?
Yeah, absolutely right. I mean, first I would start with just two primary observations. I mean, the first is that this is without a doubt the biggest, most important and most influential news story for a generation. And at the same time, myself and thousands of others like me are covering it from our dining tables, from our kitchens, our spare rooms, sometimes in our pajamas, in our sweatpants, with kids and dogs and all sorts of things going on around us. And that juxtaposition of the homely, the cozy and the familiar surroundings with this scary, unknown, perhaps unknowable crisis outside is really striking. And I think it's really affecting everyone, and not just journalists. The second thing I'd say is that unlike a purely financial crisis that directly affects maybe homeowners, company shareholders, bankers, this is, or even say a terror attack or a war that impacts one set of people or a race. This is a crisis that involves absolutely everybody. It's deeply, deeply personal. And whether you're a bank CEO or a reporter or a cleaner in a shopping center, you are worried about your own health. So I'm sat here writing about Russia's case stats. I'm worrying if they're true or what the government is telling me is trustworthy. But at the same time, I'm thinking about my wife, my family, and my friends. I'm writing about Russia closing the border, canceling all flights, and thinking, should I be getting out of the country? Should my family be on a plane? So everyone is the story here, and I think that really saps a lot of people's energy and distracts them from what they're doing in their day job. From a professional point of view, unlike a particular story that focuses on one place, one country, what one company say, what makes this truly unique is that it's completely global, and more importantly, it's a sweeping wave. As journalists, we have this incredible position at the moment because we can see how other countries are responding almost in real time, what a country will look like in a week, what it looked like a month ago, what a country 2 weeks from now will look like. Right now, take China, Italy, the US, and Russia. You have 4 separate stories that essentially are repeating each other. So you can compare country to country, you can compare markets to markets, companies to companies in real time. That's an extraordinary and perhaps unique situation for a financial or a political journalist to be in. You can look at how companies are learning from each other. You can look at how countries are learning or perhaps not learning from each other in their responses. And so for populations, people are realizing there's no real safe space. There's nowhere to run to. And the safest thing to do is to stay where you are. And for investors, that's even more true. I mean, where is the safe haven right now? Where are people flocking to? And what we're seeing is people are having to hunker down in their positions, and it's a truly global story, which makes it fascinating and interesting to report on, but also completely discombobulating. And we're all trying to do it, like I say, from our living rooms.
Well, you're doing it well so far. Katya, I'd like to come back to you and actually ask you to elaborate on what you started to talk about. So you started to talk about how you've been organizing across your 40 portfolio companies, different interaction between them. I mean, in a way, it's sort of like, as Henry's saying, this affects everyone. This affects every company around the world. Do you, because you have this kind of view of a number of different companies on any given day, do you think there is more scope for information exchange, knowledge share between companies across Russia, across Europe, across the world? I mean, how do you see that developing, and what role can you play maybe in bringing that together?
We're not the only one. As a private equity groups everywhere, they're trying to make the ends meet in a way. They're trying to make the companies help each other in a way. And what we did, we started, as I've said, as just a Telegram chat, like a coronavirus, whatever, head office with all the key people from key companies starting to exchange drafts of documents or questions or Q&As, which would be helpful for companies to go through this. And we started back early previous week. And then we understood that that's it's a good part of it, and it could be very helpful for us. But also there was some inbound requests from our guys we know for a long time. We've been friends with within the entrepreneurial spirit, who asked for the same who asked the same questions, who asked, what are your plans for refinancing? What are your plans for, closing up the stores? What are your plans for doing this and this, paying the wages? How do you do it? And we basically summed it all up in the pretty basic, I would say at this stage, website, which is called antivirus2020.ru, which is full of information that we're willing to share as an institute to every entrepreneur who's willing to look at it. It's basically business versus coronavirus logo on it, but it's the content of it, the idea behind it all is to help the entrepreneurs, our portfolio companies and not, to look at how they can help with the resources, with HRs, with marketing, with traffic, with whatever they want to get from each other. And it's actually working pretty good. And when we just started, we're like 2 people. It was like in Telegram chat. Like, I have 2 very good developers at IOs. I can give it to you, but they're very good. And in a second, they will be like, yeah, we'll get them. And there were 2 people like 3 days ago. There were 30 people yesterday. It's 180 today, and I'm proud to report it was worth all of our efforts. And we've heard from basically VTB, who's doing all the same as you've heard from basically Magnit hiring guys from Burger King and Chocolatniy. So VTB is doing the same. They're trying to make, businesses work together in this environment. Like, we have all the social volunteers which are there, but we have to have the business volunteers in a way which help the businesses, in every donor and recipient way you can imagine. And we're just the in between, because we have all the info that is coming to us, so we can share and we can enrich everybody and help everybody go through this very hard stage, I would say, globally everywhere, frankly.
And the platform you're talking about, so this is something that is, I know it started with your portfolio companies, but this is now open to anyone, entrepreneurs, companies who want to be a part of it.
Exactly. Okay. So you can go online. You can just print just antivirus2020.ru, and you're here. You have all the access to all the data we have. It's again, we're developing as I speak, because there are a lot of companies that are involved currently in making this a really good product for business community, and it's still starting early. And I know there are some other financial groups again who are starting to ask, how can we help? How can we interact? There's like a lot of discussions on the background where excessive personnel at one portfolio companies go as a pack to another portfolio company, even not ours, which is totally great for everybody, because there is no time spent on this. There's like effortless moving of key personnel, which is great and smart and easy to learn about businesses that need it. But not only that, also co-promos all the time. Gaddis, doing something for Skyeng, for Papa John's. So we're basically, everybody's helping everybody. So because we think that's the only way to actually survive this all partially.
Inshallah. Yeah, well, it sounds like a very good initiative. I encourage people to check it out. Dimitri, if I can come back to you, and if, you know, again, which predicting the future is not always easy, and particularly in this kind of time. But, you know, if we see a sort of a more of an extended impact where, you know, where we're all operating in this kind of virtual sort of remote mode for longer than people expect, you know, not a few months, but longer than that. At what point does it start to influence your thinking in terms of the types of financing you would be recommending? I mean, you know, are there certain creative approaches to finance that you might be thinking of, or alternative ways of approaching it, if we find ourselves in this kind of environment for an extended period of time?
Look, if one draws a parallel with what's happening in other markets, other larger markets, you know, US and Europe, where we can see already some new issuance of debt and equity, one could also imagine that once the situation stabilizes in Russia, and things basically become, you know, things come to a new equilibrium, a new normal, that the market for debt and equity for Russian issuers will come back. We don't know when it happens. We know it will happen at some point. But in the meantime, I think most of the IPO candidates in Russia historically have been well-capitalized, profitable, many of them cash flow positive companies that had an option of either doing an IPO or actually not doing an IPO and allowing their current shareholders to collect another year worth of dividends. Not all of them fit this profile, but most of them had a real option of not doing an IPO at any particular time, whether for the valuation reasons, whether for a specific industry dynamics, unhelpful industry dynamics, or for the overall sort of market condition. This remains true today. Most of IPO candidates, not just ours, but just generally in Russia, are companies that are in good financial standing, generating good cash flows. For those companies, waiting for another year or 9 months should not be a big problem. It's a time of self-reflection, housekeeping work, getting the accounts and audits, boards of directors in place, checking their procedures and policies, and making sure that when we all come out at the other end of this crisis, these companies are even more attractive to investors than before. However, we see some of our clients and some of potential issuers are high growth companies. These are companies that may not demonstrate levels of profitability that historically have been demonstrated by Russian issuers. Those companies grow faster, they need growth capital, and they relied on IPO as a tool being there at some point to provide them with growth capital. With these companies, we are exploring multiple different routes. Some of these routes are raising pre-IPO financing in private format, reaching out to broad range of potential investors, different kinds of investors, asset managers, private equity firms, family offices, domestic Russian investors of different types, and finding those investors who recognize attractive characteristics of those companies and are willing to provide pre-IPO financing, private financing before the markets come back and before the market is ready for those companies to actually list. It's also very relevant. It's a very relevant time to reassess some of the M&A situations, some of the sectors where a market consolidation should have happened months and maybe years ago, but hasn't happened yet. This is where we're having discussions with our clients and helping them analyze benefits of market consolidation, increasing sizes or absolute sizes of their businesses, increasing their competitive positioning in the market, and ultimately being able to show to investors, to present to investors when the time is right, a stronger and more appealing equity story, which will afford them a better valuation. So I think it's a time of multiple opportunities. It's a time of sort of reflections on the past and things that could have been done, should have been done, but didn't. It's a time to look into the future and try and map out your financing plan and your strategic plan, not for 6 months, not for 9 months, but actually for many years to come, given how much uncertainty is in the market. No one can be sure when the market reopens. So the company is actually forced to think strategically, not only about their operations, but also about their financing situations as well.
Mm-hmm. Interesting. And maybe, Andrei, I can come to you to pick up on that, because I know you as the exchange, you're talking to companies, private companies, but current issuers all the time. What are you hearing, and what are you advising them?
Look, the level of interaction is today is as it was before the whole thing started. So we have multiple requests on daily basis, and Dmitry said that the markets are closed now for new offerings in bonds or equities, but this may change. This will change. And companies, investment banks want to be ready. So the line communication with the exchange is open, and actually is very busy line today. Also, there are actually a lot of capital markets things are happening now. Many Russian issuers are considering or actually doing buybacks to support the share price. Not necessarily good for the exchange as the free float becomes small on the market, but as a sort of temporary measure to support the share price, it could be good for the company. So this activity is happening today. In terms of what our advice to corporates and to their investor relations is to stay open, to stay transparent. Of course, be available for their shareholders to answer questions and concerns. I think investors are now looking for more sort of quick updates on how a company is doing, how the whole situation is affecting the business, rather than sort of a more in-depth discussion of sort of fundamentals of plans, etc. So we would advise sort of more communications to investors, but perhaps in a sort of more brief format than usual.
Mm-hmm. Henry, let me come back to you on this. I remember back to a conversation that you and I were having probably just a few weeks ago before coronavirus had taken over. And we were talking about ESG, and I was asking you, as this becomes a more important sort of issue that all companies need to think about and that investors are thinking about, I asked you the question, how does that influence the way you cover company news or cover company stories? How much do you have to think about ESG, and how much space do you give it alongside financial results and so on? In some ways, the world's moved since then, and now we're talking about an issue times 10 or times 100. When you think about company reporting, how much are you going to be thinking about what percentage goes to how companies are dealing with coronavirus and what the impact is? How can you do normal business reporting in this kind of environment? How are you thinking about that?
Absolutely. I mean, look at the FT over the last 2 weeks and further back, it's almost exclusively coronavirus reporting. In fact, we've stopped printing the companies and markets section as a separate newspaper. It's now one newspaper because essentially we acknowledge that coronavirus is now the biggest business story as well as the biggest world political story, if you like. As I said before, this is a primeval crisis. They're worried about their money, they're worried about their mortgages, they're worried about the oil price, but they're primarily concerned about their health and their families. And I think that applies to corporates too. And as Andrei just said, honesty and transparency is hugely important. And I think for companies, that's the same. It's about humanity. If you can't protect your people, if you can't protect your customers, admit that and close down as much as you can. Merkel is in quarantine. Boris Johnson's just admitted that he's got coronavirus. It's okay to be honest about your health. And markets at the moment, I mean, you cannot concentrate on your share price. It's completely irrational to think about, how much do investors value my company at the moment? I mean, the dust needs to settle, and we need to go through a long time before people can start to look at that as a fair reflection. As Dmitry says, the best thing for a company to do right now is to hunker down, get your house in order, to have a time for reflection, and make sure that when this blows over, when this is finish, when this has blown through the entire global system, if you like, people are ready to come back stronger. You know, everybody wants to be looked after in this. They're turning to companies in many ways, to governments, to associations to feel looked after. People are very scared, and people will remember how companies acted in this period. I'd like to, a case study in the UK a few weeks ago, a hotel chain called Britannia announced it was shutting down about half of its hotels in the UK. I think it was about 30. And they sent this letter to all their employees in those hotels saying, you're fired, basically, from next week. And if you live in company accommodation, so this is cleaners, it's maitre d's, it's waitresses, it's people who make beds. If you're living in our hotels right now, you're now homeless. And if you've taken holidays, we're going to take that off the pay that we would have given you for the next week. I mean, obviously, this letter was posted on social media. It went completely viral. People will not go back to those hotels after this crisis. I mean, companies have got to think, okay, am I doing the right thing? Not by my shareholders, not by my investors, but by the people who I work for, the people who work for me, and the people that use my services. I know of charities that have pulled fundraisers off the streets and are still paying them a salary because they realize they have homes, they have a home to look after, they have mouths to feed. Reputations can be won and lost in this crisis, and mainly lost. And my advice to companies, and I think how the FT is, when I read the coverage from myself and from other colleagues, get ahead of governments. You know, if you're waiting for the government to tell you your people should be working from home, if you're waiting for a trade association to say, give your customers a 3-month holiday or a grace period before they pay their bills, you're too slow. You know, governments are being quite slow in responding to this, and companies can take the lead by saying, okay, we're going to send our people home, as you know, as we were all saying in the introductions. I know of companies who in Russia who've sent their people home 2-3 weeks before Mr. Putin's announcement this week. I mean, this is a time for companies to step up, to be socially responsible, and to show that they care about the people that work for them and the people that use their services. Whether you're a cafe, whether you're an investment bank, or whether you run a bus service. I mean, you've got to think about how this affects you and your company, and how your reputation can be enhanced, not destroyed. Because as Dimitri said, the most important thing is not right now how you're looked at, it's how you're going to be looked at in 9 months, 12 months, or however long it takes.
Thank you for that. Kasia, let me come back to you. And you know, obviously you're having to manage current fallout. You're dealing with all of the current investee companies and so on. But you know, equally, people in your profession, you have to continue to think about what the future is and what happens next. And I don't mean to sound crass, but where are nevertheless opportunities? Because you have to sort of think about the next sort of phase of investing. What do you think, what the kinds of companies or the kinds of sectors that you think may be best equipped to manage this kind of pandemic, and who will be the strongest companies in 2 years' time? You're on mute.
Hold on. Yep.
Yeah,
Here I am. So I can be pretty how to say obvious on that, and say everything online will be feeling pretty good in coming 3 to 6 months, which is exactly, you know, what everybody's expecting. But I would be a little bit more, you know, I would put it in a different wording. I think those guys that will be flexible, those guys that will adapt quickly on whenever, you know, whatever issues they're facing right now, adapting the service, adapting the product, thinking ahead. You know, you can be delivering whatever children's goods, and in a second you can be also delivering something else. You can be, you know, targeting the beauty services industry, because you feel that it's something that you can do at home, definitely, but you can do it because you have the skills or analytics to do it. So from all the companies that we're covering, what I'm getting at is that we feel that most adaptive ones will be independent on the industry, basically. Yes, of course, you have this, you know, heavy blows to industries, which is offline consumer-facing industries that are feeling worse, such as fitness clubs, such as sports clubs. They adapt as we speak. You know, World Plus is doing live trainings, and they're thinking, I think, of making it like a payless subscription service, which is something that is still will be a hefty blow for their balance sheet and for the P&L. But I think those guys who will try to think how to actually go through this and go to the next stage, is something that we're looking at versus like, do we have the cash flow to proceed for another 6 months if we're closed? Because this is a simple question. The hard question is how the business will look like in 6 months, and will the world look like in 6 months, and will the people still want to go somewhere and pay for some services, or companies, will they pay for this kind of services in 6 months, or will half of the offices be empty because everybody will understand that there is no need actually to go to the offices to be efficient. So there is a lot of inputs in the business models that we're facing everywhere across the portfolio, and from what we see, every business has some input that changes the business model substantially, if not 180 degrees.
Yeah, and thank you, and that actually leads me on to the next question I'll put to both Dimitri and also then to Andrei. I mean, so for me, I've been one of the people sort of banging on about this idea that the whole process of investor relations, market communications is one that's sort of ripe for digital disruption. So with ordering a taxi, it already happened. With looking for apartments, it virtually already happened. But this has been one of those sectors that's been a bit more, I would say, conservative in its approach to this. And my personal sort of view is that one of the biggest barriers to that is psychological. It's just the mindset of CEOs or people who have been working in this industry for 10, 20 years is one that they're not comfortable with the idea of this really going very much online. Do you think that, again, if we have this period of time, if this sort of extends out for months and maybe longer, and people just naturally integrate Zoom video into their sort of day-to-day life, do you think that potentially serves as a catalyst for a significant digital disruption of the whole market interaction process?
Well, I think there will be some residual effect, inevitably. It's like global security events have always impacted a number of satellite devices used by media services globally. And then those devices stayed in operation even after the end of a global security event. I think the same here. There will be a big residual impact. I think more universally, business people, companies, investors, bankers, other professional services organizations will adopt various online sort of video and conferencing platforms, giving preferences to those platforms that are most convenient to use and demand the least amount of resources and bandwidth. In investor relations, companies doing telephonic conference calls, results announcements with webcasts, it's something that is not new. It has been going on for decades. But I think when we talk about more sort of less frequent, more focused investor interactions like capital markets days, for example, or strategy days, for example, non-deal roadshows, deal roadshows. I mean, this is where I think we're going to see some change. It's difficult to say how it'll work actually, but we think that the notion of kind of social distancing in the environment when there's a risk will actually make people to be sort of more thoughtful and more kind of technologically aware. And I think this period of most uncertainty, people very quickly and corporates very quickly switching to online platforms, working from home, working remotely, affecting business continuity plans, will lead to some new solutions. And I think we will see a lot more technology in how corporates communicate with investors. Now, having said that, it is difficult to imagine for the technology to completely substitute human interaction. I think we're social creatures. We're meant to be talking. We're meant to be heard, not through a limited bandwidth channel of electronic communication, but live. Maybe people will in the future shake hands less, but still, there's some social habits that people will have hard time giving up completely. But let's see where it comes out. But I think the change is inevitable.
Absolutely. Andrei, what's your take on that?
I mean, all executives now have to go digital, right? Say Moscow Exchange, all board meetings been in video conferencing format for the past 2.5 weeks. So even sort of older, more senior people, they all have to learn how to use all these applications. And looking forward, I generally agree with Dmitry. There'll be sort of some substitution of sort of roadshows and sort of regular meetings with digital formats. And so that, if you want to sell an idea, if you want to convey a message, if you're sort of selling a company or a company story, then of course it's easier to do. It's better to do sort of when there is a personal contact. Do it eye on eye, or eye to eye, rather than via camera. So there will be some change in how companies communicate, but perhaps not a major one. Still, it's easier to communicate when you see a person. It's easier to communicate your message. It's easier and better to sell your story when you're actually in front of a person live.
Perhaps time will tell. I'd like to. We're coming to an end here, but I'd like to actually ask both Henry and then Katya to also just give a perspective on this topic in terms of how you think that your professions will change specifically from the point of view of digital online interaction. How much of what you're doing by necessity, perhaps now, might become the norm in future? You probably both argue that your professions normally involve a lot of personal contact and sort of just personal, discrete interaction. So start with you, Henry, and then we'll come to Katya for the last word.
Yeah, absolutely. I mean, look, first up, we're extremely lucky that this is happening at a time when we have this technology, and it's not only reliable, but it's incredibly widespread. I mean, I can't imagine how a journalist would have covered this story 20 years ago. That said, it's incredibly hard to do your job, or certainly to do my job, with just a computer screen and a mobile phone. You rely on statements over email, you rely on some data that's been pumped out, and that's a bit worrying that you can't essentially chat with people about that information. You get something in person, you can challenge it. You get a 20-minute interview with someone that's far more useful than a press release with 3 quotes on it. So it's a bit of a dangerous trend if people get used to that. And if companies decide, oh, this is a much better way to interact with journalists, we don't have to meet them. They're annoying when we meet them. They ask difficult questions. It's safer if they just have whatever we tell them and pump it down an ISDN cable. It will definitely change where we work, but I think it's really important that as soon as this is over, journalists get back out in the field and start doing real reporting again. Otherwise, I think the whole world will suffer as a result. Of course, the other question is, how much of journalism will survive? The industry, of course, will take a huge beating from this. It's already on its knees. It's being asked now to step up. Advertising is plunging because no one's got money to spend. Plus, there's nobody really out there to buy things at the moment. Already we're hearing lots of warnings, especially from local newspapers, local media sites, that they will not survive this. Essentially, the first wave of the internet took away classifieds. Now, much fewer car companies are advertising, much fewer retail companies. This is now going to drive that lower and lower. Now, the one silver lining in all this is that people want reliable information. Especially in a time of crisis, they want things they can trust. For the FT, crises present a fantastic hedge against disruption because, as we saw in 2008, subscriptions jump. People really care about getting trustworthy information, and they think, okay, there's a pandemic going around. I don't know what's really out there. I don't know what I can trust. I'm going to spend money on an FT subscription. In the first 2 months of March, the FT added more subscribers than our entire 2020 forecast. So that's extraordinary. And our engagement rates, our viewer hits on the stories are breaking all of our records. They've destroyed even the Brexit vote week, which was, as anyone in the UK that time can attest, was a pretty insane time. So we need to make sure that we come out of this well. We need to learn a lot from what our readers are doing and thinking, and hopefully the growth in subscribers is going to offset the fall in advertising. Just to end on a final note, Downing Street in the UK, the British government decided that journalists were key workers and so therefore could use public transport and were allowed to not be locked in their house. I mean, I think a lot of media companies are going to be saying to governments, okay, don't just be rhetorical in your support for us. Don't just label us key workers. You know, where's the financial support? Where's the business support? Because otherwise journalists could be a very high profile casualty from this crisis.
Yeah. And actually, we have some questions coming in on the social media feed, and one I will actually put, but just before doing that, I'll come to Katya just to continue.
Just a quick one then. I mean, Q&A is definitely better. But my job, I would say 80% of it is personal. Because we have this, you know, there is a part of job which is analytical, financials, and you have to understand what business is about, what you invest in. Is the business good enough to invest in? What returns it will drive? But 80% of this, of the other job, is just basically getting to know those people who will drive those returns or who will live through with you. We have a long-term business with over years and make this value for you, and they have to trust you as well because they kind of marry you in a financial way. So I don't think we basically have a bit of, you know, hiccups right now because there is especially new people who don't know a lot about us. We're famous, but not that famous. But we have a lot of hiccups in a way that people that are, you know, old school, because the digital people, they're okay with it and they're like, you know, it's not a problem. Let's do a video conference call and we know all about you. But people who are like 40-ish plus 35-ish plus, I'm involved, they still prefer to meet in person, and I think it will get back. The question is basically we don't do shakeups anymore. We don't do, you know, we'll just wave a little bit, you know, from a 2 meters distance, but we'll still do our job like that. I think it will not change, I think.
So the digital marriage, the world's not ready for that yet, yeah? So we've got time for one question that's come in from the feed. I'll put it out. It's not directed at anyone, so it'll be an open, who would like to take it. But the question is, who outside of the state-owned banks is going to be there to sort of support the expected market consolidation? Will international capital be available, and on what terms? I guess this relates to the Russian market. Would anybody like to have a stab at that?
Look, I can start. I think international capital is present in Russia, predominantly in the public listed asset area. Every Russian IPO that has ever happened, you know, a sizable IPO, real IPO, had a pretty large proportion of investors and a large proportion of demand coming from outside of Russia. We see that the Russian participation of Russian investors, both in IPOs and in trading volumes of Russian stocks, is increasing, and this is fantastic. But without international investors, it is very difficult to see a capital markets transaction to happen. We have, in the last several years, have seen a lot less of international private capital coming into Russia, and that unfortunately is unfortunate. We'll see whether the current environment will make Russia more attractive or less attractive in the end to private capital, because private capital looks for some liquidity, some predictability. Private equity investors and private investors in general, they make longer term plans, and in growth markets, Russia included, but not only Russia, it is more difficult to make long-term planning because of local currency volatility, because of many different factors. So we're yet to figure out whether we're moving towards the environment in Russia with more international capital on a private side or less international capital on the private side. On the strategic side, we have seen some interest becoming to reemerge. There were kind of one or two interesting strategic transactions that happened last year with international strategic investors making sizable acquisitions in Russia. I think we'll see in the coming months in years whether that changes or not. But the market is likely to consolidate across sectors. Hopefully, it'll become more rational in terms of pricing. Russia has historically been on the cheaper side of the growth market family of countries and markets, and that has been attractive. We're sincerely hoping that as the market settles into the new sort of norm, we'll see more private capital and strategic capital looking at Russia, and clearly we'll try as much as we can to facilitate that.
Fantastic, thank you. We've got literally a couple of minutes left. Would any of you others like to add a comment? I think Henry, you were going to say something.
Yeah, I mean, I get the premise of the question. I think Dimitri's right as well that private capital will be interested, but I think you are going to see a return to big state and big nationalized bailouts to get through this. And I think countries are going to be quite nationalistic about it. I mean, just look at what happened in the US. I mean, this is supposed to be a small state president passing a $2 trillion bailout. I mean, this is enormous. You look at Germany, you're talking about potentially nationalizing airlines, potentially car companies. I mean, let's not forget the British government still owns 60% of RBS as a hangover from the last crisis. And I think when push comes to shove, major manufacturers, major employers who are going to get pushed to the wall, potentially to bankruptcy, are going to get bailed out by the state. And I don't think we should be afraid of that. I think we should recognize that it's probably the most likely option, and then look further along to a next period of privatization, because this is not going to end well. This is not going to end cheaply either. And I think governments are in the best place to step in. I mean, how that changes politics is something that I think most people wouldn't be able to predict, but it could move in quite a nasty direction. But I think in terms of economic nationalism, that's something that we have to expect as the next wave in this crisis.
Yeah. Any last thoughts on that question?
Just a quick one, if I may.
Yeah.
I mean, as a international institutional private equity investor, have to say something, right? I mean, in terms of I totally support what Henry had said earlier, because I mean the largest deals in Russia in coming 12 months will be involving state in some way or another. Big banks, big state companies, somebody who has the cash availability to print that all out, and et cetera, et cetera. But at the same time, we've seen this in 2009. There are a lot of companies who has sufficient flows, sufficient reserves to actually figure out a way to increase their share in the market. And there is a local capital, a lot of local capital, which can actually support that. The private equity money is there as well as all this RDIFs, and everybody is there. We are here. So basically, I think there will be, if there is an interesting deal on the table, there will be a lot of cash flow available for such type of deals, because there will be a light in the tunnel in the end. I totally think.
I think.
Tom, just a quick remark that crisis here is the devaluation is happening. Devaluation is actually good for natural resources producers. And it's also good for domestic companies in terms of them being more competitive internationally, but and domestically. So the ruble devalued significantly, and it's actually good for many large companies. So they are in a relatively good shape. So I don't think that sort of nationalization of large assets is really on the agenda here.
Okay, well, with that, we're at the hour.